And our guest today on All About Bitcoin is Eugene Chang from the institutional lending desk at Genesis, which has over $15 billion in loans outstanding. Genesis is a sister company of CoinDesk, both under the wise and watchful ownership of Digital Currency Group. But this is Eugene's first time on the All About Bitcoin show. Welcome, Eugene.
Hey, Galen. Thank you for having me on.
So first, a little bit about Genesis Lending, if you don't mind. You serve institutional clients. I'm going to put that in air quotes. In crypto, what does that typically mean?
For sure. So a little bit about Genesis. We are a leading prime broker in this space. We help institutional clients facilitate OTC trading solutions, lending, derivatives, and custody as well. To your question about what does institutional clients mean? So these are a couple of crypto native trading firms, mostly hedge funds, a lot of global macro funds, high frequency trading firms, high net worth individuals, family offices, and sometimes corporations as well.
And they're coming to you for capital in a category where trading on credit is not really a thing. Borrowing, depositing, a mixture of Bitcoin, stable coins, and dollars, I assume. Is that right, Eugene?
That's correct, Galen. So just to provide a quick summary about our lending practices. So we primarily facilitate a lot of secured lending. So for example, if an institutional client wants to borrow USD from us, they would have to post Bitcoin or Ethereum on an over-collateralized basis.
Got it. So let's talk about some of the metrics that you're watching on the desk there. Bitcoin kind of range bound the past couple of weeks. What should we be looking at to think about what direction it might break when that inevitable break does come?
For sure. We'll talk about just what has been happening in general in the macro markets for the previous month. And then we'll dive into what's going on in crypto markets, especially on lending. And we'll show some charts around DeFi lending rates as well. So looking past the previous month, I think there were really two major market movements that really happened. One was headline risk about the Fed's hawkish response to growing inflation, really historical inflation. And then what really sparked market movement was news about a contagious COVID variant, Omicron, that's happening, which appeared in South Africa. What happened was that this really created a de-risking event across all asset classes, not just crypto, equities, commodities, all got hit pretty hard. So Bitcoin, just going back to the point, Bitcoin is in some ways a paradox. It's really its own asset class. And what I mean there is that most people think about Bitcoin as either an inflation hedge or a proxy for future technological growth. So Galen, on the inflation hedge argument, for example, there's an argument out there that actually inflation, the worst is over at the moment. Because if you look at major commodities such as US oil, for example, which is trading at $85 per barrel before the sell-off occurred, it was down almost 25%, trading in mid-60s. Other asset classes such as copper was down 15% from its all-time high. Natural gas was down 45% from its all-time high. These are all major commodities that feed into inflation. Other important data points that I think investors should really hone in on, especially in the upcoming weeks, are things such as the PCE and CPI index, and this would give a further indication on inflation trends. On a technological argument, there's also a ton of development activity that's going on in crypto native ecosystem. There's the industry's correlation to things such as NASDAQ is really positive, but then NASDAQ is only down roughly 4% from all-time high. Other components within the NASDAQ, such as Tesla, for example, which is a high beta stock, for example, is down almost 30% from all-time high.
So let's go back to Bitcoin and its role within the crypto category for a moment. I mean, I think a lot of crypto native investors tend to think of Bitcoin as that kind of lower risk end of the crypto spectrum. I think as you were just outlining for the sort of broader category of investor, Bitcoin is definitely in the risk on category. Do you kind of see do those two collide? Those two forces collide in a risk-off environment, and if they do, kind of which one tends to prevail?
Yeah, that's a great point. That's a really interesting point, actually, Galen. I think right now there are really two pockets of investors. So more traditional leaning investors view Bitcoin as a huge risk-on asset, the one that has a lot of volatility and high beta in the market. But then when you think about how crypto native investors view Bitcoin, it's really more of a risk-off asset. It's one in which if there's a market downwards movement, a lot of investors would put their assets in Bitcoin, for example. just so that they can hedge out a lot of the downward price momentum throughout the industry.
Tell me a little bit about what you might be watching internally in terms of crypto sentiment. I think we can sort of read the signs, as you were talking earlier, on a macro level about whether there's a sort of risk on move or risk off globally. And certainly I would agree with you that the signs on inflation have been somewhat positive. Good news out of South Africa today, as you may have read, on the trajectory of the Omicron spread there, which may put some comfort back into supply chain risk in the coming weeks, if it tends that way here. But I'm crypto and everything else. What should we be looking at inside the crypto category to determine whether crypto investors are seeing things in a kind of a risk-off mood or a risk-on kind of a mood?
For sure, and we can definitely talk about DeFi lending rates a little bit as well. So again, Genesis, we face mainly institutional clients, so some of the DeFi rates might not reflect the rates that we see right now in the market. A good way to illustrate really leverage in the system is through these DeFi lending rates. So one thing to really illustrate about DeFi lending rates is that most of it is variable rates for borrows and loans. And just note that the borrow factors into collateralization in DeFi. And then to caveat that right now, if you look at fixed term rates for DeFi lending, so if you go on platforms such as Aave or Compound, for example, a lot of their lending rates are actually in the low to mid teens at the moment. So I think this chart here really illustrates an important story of what happened in the past month. We saw DeFi lending rates really spike up, as you can see with the red line, to 10%. And then it really draw down immediately throughout November and then December. So a couple of things that happened. One was that we saw a huge deleveraging effect that happened late in November, around the post-Thanksgiving period. And then markets clearly entered into a risk-off phase after that. What preceded this event, Galen, was that annualized basis for BTC and Ethereum started to unwind from its high 15s, even sometimes 20s range. And this unwinded and created less opportunity for delta neutral investors in the cryptocurrency industry. So
we're looking at lending rates in DeFi here, which, as you were saying, I think track kind of or tend to move in the same direction as what you might find from a centralized lender like Genesis. And reflect sort of the demand for capital, right? As you see here in that late October kind of phase, demand going up, people looking for capital to leverage their investment, and then that just kind of tailing off very quickly in the month of November, and in this kind of slow decline that we've seen into December here. Is that a fair way to characterize that?
That's definitely a fair way to characterize that, Galen. I think October was such a long time ago, and kind of wish the market sentiments back then. But I think an important thing to note about DeFi lending rates relative to institutional lending rates, such as players such as Genesis, is that DeFi lending rates usually lags what we see from the institutional client side. So we usually, players such as Genesis, usually publishes rates that lead, and then DeFi lending rates typically lag after a lot of the supply of, for example, such as cash gets flushed out the system.
You were also mentioning the perpetual funding rate, which is another kind of similar barometer, right? Perhaps more a little more hair trigger than what you might see in the DeFi lending rates.
So I was talking a little bit about annualized basis rates, and then what happens is that usually when annualized basis rates start collapsing, for example, you start seeing open interest on exchanges going down, which feeds into a lot of the funding rates for perpetual swaps. And now we're seeing a dynamic in which perpetual funding was down and then negative, but then with Bitcoin's movement recently, we're seeing a lot of more positive movement for perpetual funding rates for BTC and ETH, which might signal something more positive going forward.
Yeah, so I think everybody's looking ahead to the final week of the year. Are we looking for a Santa rally? Is it or is it going to be a sort of a tax loss harvesting situation? Certainly Bitcoin and other cryptos are up quite a bit on the year, but all that depends on what point in the cycle you entered, I suppose. Where do you think what do those signals say for the remaining few days here and into 2022?
So where do markets really go from now? I think all asset classes have been really oversold at the moment. A lot of investors have covered their positions. So as a result, we saw more upside momentum that happened. If you look at like BTC short index on Bitfinex, for example, there's been a lot of unwinding lately of short positions. And then as a result, coming back to like the funding for perpetual swaps, that has caused it to go from negative to more positive lately. And this ultimately provides more upside momentum. However, whether that's going to be just a relief rally or more sustained upward momentum really depends on where the market's going to last.
Are you working through the holidays, Eugene?
So as I was talking about, Christmas season might really play a factor into this because it's technically like low volume, pretty quiet season as well. But this industry is 24/7 and 365. So with Genesis, we'll be having coverage over the holiday season. So if investors want to reach out to the desk, we're more than happy to communicate and share some ideas.